On the 30th of August, just one day before Malaysia celebrated its Independence Day on the 31st, Petronas declared a 50 billion dividend payout to the Malaysian government. Now, isn't that a good Merdeka Day surprise? I was, and you'll be thinking, isn't oil and gas dead? Isn't it in a downturn or sunset industry? Well, I guess numbers don't lie. Now, actually, why is this number even important to you or even me as a Malaysian citizen? I think if you want to continue enjoying subsidized fuel, subsidized food, then let me show you why this figure is important to you and whether it is sustainable. Secondly, I wanted to bust this myth that oil and gas is actually a dying or sunset industry and green energy or renewables will take over the world. In my personal opinion, I think oil and gas is very much alive and kicking, and I'm going to show you why. And last but not least, if you stay till the end of the video, I'm going to show you one company that is involved in the exploration and production in Malaysia and overseas that might be poised to profit from these high energy prices. Hi everyone, my name is John, and in this video I'm going to show you whether Petronas can actually sustain paying the government this huge amount of dividends going forward. Secondly, the outlook of the oil and gas industry and why does it matter to us even as non-investors. Obviously it's for investors as well. And as a disclaimer, I am not a licensed fund manager, so whatever I say does not constitute a buy or sell recommendation. If you do need to get licensed financial advice, please speak to a licensed advisor. 50 billion, guys. I don't know about you, but that's a lot of billions to me, and the year is not even ended. So Petronas just reported their second quarter results, so half yearly for 2022 combined, and it's going to be a record dividend payout. This is the second highest recorded in history. I think the highest was in 2019, where they gave 54 billion in terms of dividends to the government. And as I said, we haven't even ended the financial year end. What makes them have the confidence to actually declare the payout so early? Now, let's dive a little bit more into their financials. So as mentioned, this is one of the highest dividend payouts that Petronas has ever given. So I took data all the way back from 2012. I think 27 billion, 28 billion, 29 billion in 2014, and the uptrend kept on going up and up. And notice 2016 and 2017, which was years when the Brent or the West Texas Intermediate WTI Brent crude prices actually fell below the $50 mark, and I think that's when Petronas earnings actually suffered, so they paid less. But a good comeback in 2018, they paid 54 billion. What you realize is the trend keeps on going up and up, but what is also interesting is that the revenue as a percentage of revenue for the government is getting less and less from petroleum, and I'm going to show you this very shortly. So is this dividend sustainable? Well, let's just look at the figures. Now, in 2012, their operating cash flow was actually 103 billion. And out of that, the dividend they paid out was actually 27 billion. So that made up about 26% of the operating cash flow, or the cash flow from operations from Petronas, which is actually good. It means they're paying out a quarter of what they make in operating cash flow to the government, and the rest they keep it to reinvest, to grow the company, and which is wonderful. What worries people most of the time is that when they pay out so much in terms of dividend, it hampers the efforts of a company, somebody as big as Petronas, that it hampers the effort of it to grow. And I was just, did some calculation and did a ratio of what was the dividend payout as compared to the operating cash flow, or the cash flow from operations, CFFO. And in 2020, even when they had a net loss, not even a net profit, but the operating cash flow was 40.7 billion. And out of that, they actually paid 25 billion, which is very, very commendable in a bad year, right? And yeah, with that case, they actually paid out quite a high percentage, which is almost all of their operating cash flow. But in 2022, we're only at the half of the year, and they are paying out 80% of their operating cash flow for the half of the year, which is good because 50 billion, I think I'm expecting them to make at least 100 billion in cash flow this year. And they're paying out 50, so it's probably like half. And I do commend them having the discipline, not giving out everything, because they do need a lot of capital expenditure, a lot of OPEX costs. The costs have gone up to really be in the industry. And by them practicing this prudency, you don't give out everything so that you still have money to actually grow the company. So do I think whether it's sustainable going forward? Yeah, I think it is. They have practiced a lot of discipline in saying no to the government, even in bad years, especially financial year 21, where the government coffers really dried up, and even then they didn't pay everything out of their operating cash flow, which was very, very commendable. I think I really salute the professionalism of the Petronas board. I'm very sure the CEO and the board face intense pressure from the government, since they are the big boss, or big brother, I should say. And yeah, I think very, very professionally run. And the CEO, Tengku, made it very clear that we're only going to pay out whatever we're comfortable after taking into account operating expenditure, capex costs, and some buffer, And I think further down the video, I'm going to explain what his projections for the oil prices going forward will be. And I think they are already very conservative when they put that in. So yeah. So with the budget coming up on October the 7th, I think we as Malaysians should be a little bit concerned about where is the government going to get all this revenue to actually subsidize whatever we have right now. Fuel subsidies, food subsidies, a lot of these Penjana funds that are going out, EPF withdrawals. So if you want to check out a more detailed breakdown of the budget for last year, I did a video. I'm going to show it on the right with my former partner, MJ. So I did the research, break down what were the revenue streams for the government. And here is what the government has actually projected for 2022 and comparing it historically to 2020 and 2021. So if you see this box at the top that says PITA, that stands for Petroleum Income Tax, 12 billion, 12.7, 11.5, 12.4 billion. So these were the collection that the government received in terms of petroleum income tax. Now, all these Petronas dividends that they are being declared, where is it actually recorded under the federal government's budget? It's actually under investment income at the bottom, where you see 46 billion, 35 billion, and 39 billion estimated numbers for 2022. With that declaration of 50 billion, it will definitely give a huge sigh of relief for the government with all these subsidies going out. And in my personal opinion, I think we shouldn't rely on them over the long run. I'm a big proponent of reintroducing the GST, because if you check out that video that I mentioned earlier, I'm going to put it at the right again. GST at the peak of its collection would have brought in roughly about 40 to 50 billion to the government coffers. Now compare that to SST, 27 billion as estimated for 2022, which is just half of what GST would have been brought in. Now, I know there's different school of thoughts that say no to GST because there's a lot of wastage to government. Yes, there is bound to be some wastage. There's no way we can fully eliminate wastage on the expenditure on the side of the government. But I think GST, it's a more fairer tax regime, because SST, there's so many loopholes. A lot of people in the T20 category are finding ways and means to do tax avoidance with SST, but GST is a consumption-based tax. The more you spend, the more you have to pay taxes, which is, in a way, it's not a perfect system, but it's a much fairer system, in my personal opinion. Subsequently, it's also very heartening to see that the revenue streams from petroleum-derived income is actually reducing over the years. As you can see on the chart, 2009, it formed about 41.3% of the government coffers of revenue. Non-petroleum was the difference, which is roughly about 69%. But come 2022, petroleum only consisted of 18.8% of the government's revenue, which is good in a way, because we are diversifying the income streams much more for the government of Malaysia. Non-petroleum revenue is rising. And again, direct tax is a big chunk of it, and hopefully, hopefully with the GST reintroduced, it will actually strengthen the government coffers again. So I hope what you are seeing so far has brought value to you, and if it has brought value to you, do consider subscribing to my channel, give it a like, hit the notification bell so that new videos are out, you'll be notified, and hopefully we can all do our part in elevating Malaysia's financial literacy and investment literacy. So, is oil and gas really dead? Looking at the data doesn't seem true. Why do I say that? Look at the global oil demand going through to 2050. And this is by the US EIA, the Energy Information Administration. Liquid fuels, renewables, while it's on the rise, it can't even catch up to liquid fuels even by 2050. Now, a lot of companies have declared a net zero goal by 2050. Net zero doesn't mean that they totally wean off fossil fuels. Net zero just means that whatever they have in terms of carbon emission matches that of their sources of revenue from fossil fuel. And yeah, I think even in Malaysia, we haven't even introduced a carbon trading market, which the US already has. I look forward to that. But more importantly, I think this delusion that we're going to wean off fossil fuel in the near future, especially over the next 10, 20 years, I don't think that will very likely happen looking at the data. I do believe, and I'm a big proponent of green energy, it's just that the economics just doesn't work out. And, you know, with all these ESG buzzwords, green energy, sustainable energy, a sustainable way of doing business, you know, being floated around on all these news headlines. The struggle is this. Let's just say we are all for ESG, all for green energy. Are you willing to pay 10 ringgit per litre for your fuel tomorrow? I highly doubt so, right? And therefore, I think striking a balance in which there is a transition period where we bring economical scalability for renewable energy down to a level where it is feasible. We still have to live with fossil fuel until that time arrives. The other thing you would have noticed, or you wouldn't have noticed, is that because of all these green energy proponents, ESG financing, the oil and gas industry has suffered a massive underinvestment. And if you can see this chart from Right Start Energy, one of the world's or leading renowned energy research company, you can see that since 2015, when the oil prices actually tanked, year on year, you're seeing an average of 25% less capex being spent. Now, the problem about the oil and gas industry is that you don't turn on a tap and you get oil. You know? The moment you decide you want to make a field or develop a field, it usually takes anywhere between 4 to even 5 years before you can actually produce oil from that particular field. And as you see in 2019, when COVID hit, end of 2019, 2020, when COVID hit, the capex drop was 29%. It's even worse than 2015 and 2016. And therefore, because we have delayed those capital investments, the supply and demand balance has really disrupted, because demand is just continuously going, but then supply is being reduced because of underinvestments. And therefore, my guess is that paying oil prices at $100 to even $150 a barrel is going to be a norm going forward. I don't, I may be wrong, but I don't foresee oil prices dropping to below 50 in the near future, at least for the next 4 or 5 years, and maybe beyond, unless we see activities picking up to actually regain whatever we've lost in terms of capex spending over the next few years. So, but that's my prediction, and the data actually quite generally supports it. And for those of you who believe oil and gas is dead, hopefully, you broaden your mind to look at the data more objectively. And we all want cheap green energy, but is that likely to happen? Not in the near future. Another data point I want to add is that the CEO of Petronas himself, not me, actually sees that oil price will range anywhere between 90 to 95 US dollars for the second half of 2022. And he only sees a correction of price come 2023. I foresee it's going to be even longer before that, because as what I mentioned earlier about the reduction in capex, we have massively underinvested for so long. And I think it's going to take a while before we get to that equilibrium supply and demand curve again. So armed with all that data set and information, how will you benefit as an investor? What are the likely opportunities available to you? And there's one such company. Again, as I said, it's not a buy or sell recommendation. One such company is Hibiscus Petroleum, listed in Malaysia. I've actually spoken to Dr. Kenneth a few times and his executive team, wonderful executive team. I think I really have to salute them for the transparency of their reporting, because as an investor, the more information you have, the better it is to build your mental model, your framework, how you estimate their future earnings going forward. And this was just recently released, I think just 1 or 2 weeks ago, the operational highlights. Their recently acquired assets from Repsol. They bought over Repsol, for those of you who are unaware. What I want you to focus on is this. You can go download, you could just go to Hibiscus website, you can download their investor briefings, especially to the analysts and fund managers. It's right there. What I want you to focus on this particular side is actually the average realized oil, condensate, and gas price, which is roughly about $85 per barrel. And the operating production cost, or OPEX, is on average about $15.42 per barrel. That means in between, this is actually their profit. Obviously, their production sharing contractors, they do get a certain cut, their partners get a certain cut. But the point I'm trying to make is that the difference in between your selling price and your average cost per barrel is what makes the profit and loss to a particular company. Obviously, if prices of oil drop below $15 a barrel, they're definitely losing money. But as mentioned earlier, the CEO of Petronas is looking at what, 90 to 95? So you can do the math, guys, and you can roughly estimate based on that scenario how much is Hibiscus going to make, in the next few quarters or half a year. Too bad I can't invest in Petronas. Obviously, if I speak more and more, this video is going to be very, very long-winded. But Petronas is actually one of the best-run oil and gas companies in the world. If you look at the return on equity or return on capital invested, it's in the high teens. Kudos and salute to the professionalism. And, looking at where Hibiscus is today, I mean, keeping that cost very low is actually a winner already, because think of them like a factory. Their reserves in the ground are actually their inventory, and what they need to produce now is just that crude oil. So as long as you maintain your cost low, the difference in between your cost to your average selling price is what is going to bring in the profit for the company. So there you go, Hibiscus. So as a summary, I've shown you three important things in this video. The first one is whether Petronas' dividend is actually sustainable going forward. And I've shown you the numbers historically. They've been very prudent in the way they allocate the dividends to the government, kept a buffer, and kept on spending on capex. Kudos to the professionalism of Petronas. Secondly, I wanted to bust the myth whether oil and gas is actually dead. To the contrary, I don't think so. I think they have easily 15 to 20 years of runway before it actually, renewable energy actually overtakes them, hopefully at scale. And last but not least, potentially a company to benefit is actually Hibiscus. They have kept their costs really low. They acquired Repsol, really enlarged their reserves, and hopefully they do get to benefit from the elevated oil and gas price. So I hope you've gained some knowledge, value from watching this video. I would really love a subscription from you guys. Give it a like, hit that notification bell, so if there's a new video coming out, you'll be notified. Do leave comments. More importantly, if you want to learn more about the oil and gas industry, check out a video I did with Rondi. It's a 2-hour video. We talked about the entire upstream, midstream, and downstream value chain. For those of you who really want to deep dive and understand the oil and gas industry more, check out that video. And last but not least, do leave comments. Let me know what I've missed out. What are the industries you want me to cover? And I'll likely see you in the next video. Ciao, guys.